point out, the market is slightly off the highest levels of the morning. 114 now. I mean, we started with this 200-point gap up. And that's a familiar, slightly downward sloping line, right? So let's see how it plays out very, very early. Right now, there are only one or two Nifty stocks that are down by over 1%. Bharti Airtel is one of them, and then there's SBI Life. Everything else is still positive, but perhaps we need to watch the screen very, very carefully. Okay. So that's the market for the time being.
Just want to mention one stock. I don't know if you guys are excited, but I'm very excited with PVR and the expansion plans that they have. They're planning to add 200 screens every year. You know, this whole concept now is picking up yet again, right? People are starting to get back to theatres, and people are starting to do that every Friday movie watching as well. And PVR has big plans with the merged entity. So there's lots of synergies coming through as well, but there's 200 extra screens, so it's going to be fun.
It's just waiting for better content to come through, really. And yeah, going to the movies is.
Do they still have that Friday release, or is now Thursday release? I thought it was Thursday, right? Or
I haven't watched.
I haven't been to the theatres in the longest time, so I guess.
You guys are advocating 200 more screens.
I will let the content come. I think the screens are welcome in any case. But Mihir, great to have you on the show today. Thank you very much for taking out the time. With this, we'll move to our next guest and our next conversation. Laurence Balanco of CLSA is with us to make sense of all of this volatility and literally the whiplash, the whipsaw moves that we've seen across asset classes and markets. Laurence, great to have you on the show. Thank you for joining in. I'll start with what I believe was your view for the Nifty back in December of 22. That's when I think for the year you were looking at targets of 20,000 plus. Now, a lot has changed since then. India has underperformed. We've had local issues. We have banks blowing up in the US. We have the Fed going full throttle. Do you still retain that view? Are you expecting 20,000 plus on the Nifty this year?
Well, I mean, we obviously haven't held the break above the 18,300 area. And essentially, if you look at the Nifty, we're back in the trading range that we had from 2021 through to 2022. And that's basically the top end being 18,300. Bottom end being all the way back at 15,400, and we're currently sitting in the middle of that range. So unfortunately, a bit more volatility, but the longer term trend is still intact. And yes, the longer term targets of 20,000 plus are still intact, just that we have to go through more of this volatility in the current range.
Okay, so you're saying your long-term target of 20,000 is intact on the Nifty, but I also heard you briefly mention that the bottom end of this trading range is 15,400. Is that your base case? I mean, you know, we're far from it, and I don't know if we're heading there, but do you think that could be a reasonable assumption over the next couple of months?
Look, we're currently sitting in the middle part of that trading range. So if you look at price action over the past 12 months, you have seen price swings of 15 to 18% within that trading range. Currently, there's this short-term shelf of support by the September 2022 lows, which sit around the 16,800 area, and that's roughly middle part of the range. You know, you would have to think that the S&P would need to break below its support area at 3,800 to have the Nifty trade down to the 15,500 area. At this stage, what we've seen globally is, you know, key support levels have held, and the majority of markets are in these volatile trading range that we've seen develop over the past 6 to 12 months, depending which market you're looking at.
Laurence, let's talk about the US rates market, right? Yields, especially in the 2-year. We saw massive fall, and that we've seen some rebound overnight. Have we made a top? Is that 5%, a little over 5% the top, which we saw last Wednesday? Because typically, you know, major tops are more distributive in nature, right? I mean, it's a drawn-out affair, and it's not a 100-point fall in 3 days and you're done. What's your sense?
Sure. I mean, it's very rare to get these sort of V-shaped tops in the market. I'd say that the US 2-year yield price action is not as clear as what we've got on the 10-year. You know, the 10 years are far more distinct, with this range between 3% and 4 to 4.3% being the top of the range. But I think the violent sort of reversal that you've seen in the 2-year yield, we're likely now setting up a pretty clear trading range where that 5% has turned into resistance. And you've seen the 2-year, as of last night, rebound off its 200-day moving average, setting up in its newly developed trading range.
So just to reiterate the levels, Laurence, if you could just revisit, what is the specific Nifty target? 20,000 what exactly? And also if you could just give us your trading range for the US 10-year and for the dollar, just to revisit all the levels on these important parameters.
Yep. So basically, the longer-term target that we have is 20,700 on the Nifty. If we're looking at the US 10-year yield, we basically have support coming through at 3 to 3.25 and resistance at 4 to 4.3. So that's essentially the trading range that you're looking at on the 10-year yield. And if you look at the dollar, we had an important break in reversal late last year. Resistance for the dollar index is the 200-day basically, which sits at the 106 area. And we think ultimately you get a downside target of 95 for the dollar index.
Okay, and back home, you said that the short-term support on the Nifty is the September 2022 lows, which is around 16,800. If we do head there in the near term, do you think the leadership on the downside could yet again be led by banks? What are you looking at on the bank Nifty in the near term?
Yeah, so Bank Nifty on the 200-day, but probably the sector that's most vulnerable here is the auto sector. So we've been flagging this one with the sort of triple top that's developed. And this week we've seen an accelerated move to the downside. So we think autos lead the downside and underperform the bank side. So yes, banks have obviously underperformed year to date essentially, but where we see the most vulnerability is coming from the auto space.
Okay, so you're saying autos are going to lead, banks in any case have underperformed up until now, but the next leg of the downside will be led by autos. Do you see IT once again get back into the vulnerable spot? Because this month already, some stocks like Infosys, etc., are down about 4-5%. What's your view on the Nifty IT?
Well, Nifty IT is more of a trading range. And if you look at it relative to Nifty, you've actually got some relative outperformance as it's managed to hold that range. So unlike the price action last year where tech led the downside, we're looking at the Nifty IT index, more of a consolidation, and that consolidation pattern is actually giving you some relative outperformance. It is centered around the larger cap names within that IT sector rather than the mid and smaller cap names.
Laurence, just a few more questions. You said short-term support is 16,800. Below that, we're almost there. I mean, yesterday we got to almost there within 100 points of it.
That's right,
so below that, where do you see supports coming in? I mean, what kind of downsides open up?
Yeah, unfortunately, it's all the way down to 15,500. So, that's bottom end of the range or the broader range that I've outlined there. So, we're talking about 8% decline where the next major support area comes through at that 15,400 to 15,500 area.
Okay, and so that's around the June lows, right? 15,200 or so was the June low last year.
Yeah, it's the June lows as well as the highs in the first half of 2021.
Yes.
But Laurence, sorry,
just 1 minute. I just want to clarify. The long term, you said the target is still 2,700. That is still the end of the year? End of this year?
I think it's going to be
when
quite
you said
difficult.
Long term?
Yeah, it's going to be quite difficult to get to that target within this calendar year. So, difficult to give you an exact time horizon on that structure because of the depth of the decline and the volatility that we've seen in the current range.
If you were to put timelines to this, what would I mean, to be a little more, would be helpful for viewers when you say,
Well, I mean, unfortunately, just to put this into perspective, if you want to see the recovery of the 2009 lows, the Nifty rallied 170%. It then spent the next 3.5 years in a trading range before we broke out in early 2014. We've had 130% rise off the 2020 lows. So the duration of this trading range could extend through 2024. It's very difficult to give you an exact sort of time horizon around this. I mean, I think what is quite clear is these defined trading range levels that we do have. And I think the point and what we've been highlighting to clients is it is a more tactical environment, and trading off these levels is what we're looking at as the setup into year end.
Oh, okay. Well, yeah, we were just discussing this yesterday, that long, boring period, just after the global financial crisis where the market was in a big range. But Laurence, I just want to clarify, you said that 15,500 could be potential downside if 16,800 breaks, but you see that happening only if the S&P breaches which level? You did mention a level, I think, where there could be a correlation.
That's right. So 3,800 is the December lows for the S&Ps. It's essentially what we tested earlier this week, and it's what's been respected. If you did break below that, the next big support area for the S&P is back at its October lows, which is around that 3,500 area.
Okay.
Which is also, I mean, 3,900, a little over 3,900 is where the 200-day, 100-day, etc. also start to come in, right? But is the averages are also now pretty close to where we are because we've spent, the price has not gone anywhere for a long time now, for some time now at least. Laurence, just one more thing. I think you put out a call on metals, saying that metals have put in a top. And you were, I think, you were referring to an Australian resource index. Does that apply to metals in general overall?
No, so I mean, that's more specific to the Australia mid-cap miners, which is more the lithium names and the nickel names.
Okay. Just wanted to clarify.
Got it. Yep.
Okay, all right. Just one final question from my end. Apart from the, the stocks or sectors that you spoke about, any thoughts on how one should approach some of these large cap names like Reliance? Because they've seen a lot of pressure this year. Reliance has already underperformed the Nifty. I mean, the Nifty is down about 6%. Reliance has lost over 10% this year already. Do you see further pressure from these heavyweight names?
Well, for Reliance itself, there's quite a bit of support at 2,100 to 2,200. And if I look at my momentum profile for the stock, it does look like momentum is slowing as it approaches the support area. So my base case would be that we should hold that area and, again, remain within the trading range that you've seen over the past 12 months for the stock. But yeah, 21 to 2,200 is pretty critical for the stock, for that level to hold to maintain that trading range structure.
Can you, your main message is be opportunistic and be tactical. That's the market in 2023. Can you identify any trades, specific trades, Laurence, specific stocks here in India?
I mean, on the stock side, I'm pretty limited on what I can discuss. So it's sort of down to sectors. And like I say, to me, the most vulnerable sector right here is the auto space. You're getting relative outperformance in your IT space. I will be looking at the bank sector for a re-entry point into that, but I'm not seeing the entry point right now on the banks index. But that is something that I would be looking for, some kind of slowing downside momentum to offer an entry point. Otherwise, the clear sort of message here is, sell the autos. That's where the vulnerability is, and tech, at least large cap tech, is giving you some relative outperformance.
Okay, just before we let you go, Laurence, finally, what do you see on the charts for US equities and bank stocks? What's the base case right now?
Well, I mean, you've seen the regional banks index break down significantly. You've seen the broader, larger cap banks index break key support too. We've got some short-term extremes that we would expect a rebound, but the breakdown levels that you saw earlier this week, that's likely to cap the upside potential. And like I've said, on the S&P, we're basically looking at a 3,800 to 4,100 trading range, and that's basically developed since mid-December.
Okay, we live in uncertain times, right? Thanks a lot, Laurence, for joining us and giving us an update on the market as a whole. So that's Laurence Balanco saying that in the very near term, the short-term support on the Nifty is definitely the September 2022 lows of 16,800. But in the longer term, the 20,000 target on the Nifty is intact. By the way, the market has come off a little bit, so it's losing ground, as you can see, slowly and steadily losing ground, and that's when the volatility generally tends to kick in. So not able to sustain its gains, and sell on rally is something that's playing out yet again. But we'll get back to that big theme, which is the SVB Bank fallout, the failure, and the ramifications it would have on several companies. Sanjeev Bhikchandani of InfoEdge will be joining in to talk about the impact from the SVB collapse on the company, and later we'll connect with